I'm JC, the author and instructor for Pro Trading, the creator and developer of Thinkorswim Toolkit and TradingView Toolkit, with a special CIS trading presentation of Markets in Focus with Quorum's Capitalism Theorem. This is going to be an introductory overview video of Quorum's Capitalism Theorem and the 2-hour seminar, which is available at cisevents.wordpress.com. I will also, over the next week, be publishing a slideshow with the slides of this presentation available on the website to view with the overview for Quorum Capitalism Theorem. And I will also be producing a formal video to accompany the CIS tax plan proposal, which is available at youtube.com/user/CIS trading. I will put a card in the upper right-hand corner and an option to link over to that video directly at the end screen of this video, where you can see the CIS tax plan proposal and review the information for the CIS tax plan. Included in Quorum's Capitalism Theorem is a CIS CCT indicator system for TradingView Toolkit, a Stocksometer, a Forexometer, and Quorum's Capitalism Theorem is a new economic theory that focuses on everything capitalism from a market-based perspective. Make certain that you watch the entirety of this video. At the very end, I will go over the CIS GG Pro Metrics algorithm from Thinkorswim Toolkit and the QMA ICE market mean analysis and those signals as it relates to Quorum's Capitalism Theorem and the real capital cost. At the bottom of this chart, you will see CIS CCT real capital cost, a new indicator for the TradingView.com platform. It provides the prorated adjusted pro trading bond premium, the current pro trading adjusted yield, and the real cost of capital. It also offers a buy-sell condition, which I will go over toward the end of this video. So make sure you watch all the way through to see the very end of this video, and we'll look at the US dollar Japanese yen as it relates to the CIS CCT real capital cost indicator for TradingView Toolkit. First, let's look at the US dollar 10-year government bond yields. In Quorum's Capitalism Theorem, the yield and the yield spread translate to produce a cost per $100,000 of capital. In this case, the real cost of capital, the yield spread, is negative 0.487%. So the cost per $100,000 is negative $487, or negative 0.487%. In basic economics, this translates to being paid a discount on the yield of $487 per $100,000. When you look at the U.S. 10-year government bond, Quorum's Capitalism Theorem translates the bond and the yield spread to express the real value change in the U.S. dollar. In this case, the real cost of capital is calculated to negative 0.155. That's negative 0.155% or $155 per $100,000. And what that initially means is that the value of the dollar, the market value of the dollar, should increase by roughly 0.15%. When you consider the NASDAQ 100 futures and the real cost of capital from Corum's Capitalism Theorem, it's minus 0.49 or half a point. Now, the negative number implies that the market will outperform the poor U.S. dollar performance in the economy. It's basically saying that the dollar in the U.S. economy is not performing if that number is negative. And this is advantageous for a market that can outperform that poor performance in the U.S. dollar. When you look at the S&P futures, for example, Corum's Capitalism Theorem real cost of capital translates to minus 0.49 or half a point. And again, that negative number implies that there's a half a point advantage to putting a dollar to work in the markets. If it was a positive number, for example, positive 0.49, the positive number would imply that the market is underperforming a strong U.S. dollar performance in the economy. So when we have a negative number, that negative yield spread or that negative cost of capital means that the U.S. dollar in the actual economy is underperforming. If it's a positive U.S. dollar, it means the U.S. dollar in the economy is outperforming. And with the bond, the economy can afford to pay a yield. So in this case, the economy cannot afford to pay a yield. And so there's a discount on the yield. In other words, the bond premium is greater than the yield. Ideally, the yield is always greater than the bond premium. When you look at the Dow futures and how that impacts the Dow Jones Industrial Average and the futures contract for the Dow Jones, Corum's Capitalism Theorem translates the plus or minus performance of the dollar. 0 indicates a market value for the Dow Jones. In other words, if the real cost of capital is 0, then that means that the exchange of the dollar in the Dow has no positive or negative performance correlation. However, the pro-trading adjusted bond premium and the pro-trading adjusted yield indicates a 3-point cost and a 2-point gain. And that's the premium to yield ratio. In other words, there's a 3-point potential cost to making a trade in the Dow futures for every 2-point gain. And that's sort of a risk assessment, that premium and yield ratio.
Yeah.
When looking at the foreign exchange market, for example, the euro-British pound, in a situation where you would be giving up the U.S. dollar, Corum's Capitalism Theorem translates the real cost of capital, in this case, to minus 0.5 or $500. This is paid in the daily settlement if a trade is carried. And the way it is paid is it's distributed or redistributed across the market. So that's 50 pips of value relative to the US dollar that will be redistributed throughout the market algorithm's adjustment of the dollar value for that day for any trade in US dollar that is carried over through the rollover or the settlement. In intraday trading, this means that $5 of your leverage for each lot, that's 5 ticks, will be redistributed throughout the market relative to the US dollar at work per trade. When you look at the CIS CCT real capital cost indicator for the TradingView toolkit, at the bottom you can see that there's a sort of buy-sell condition indicated. You can see that we're negative in our cost of capital. In other words, the market is actually paying a minus 0.50 in regard to the US dollar. And that means that the dollar is underperforming in the economy. And the economy can't afford to pay a yield. And so the bond premium is higher than the yield is. Across the top, where you have the green and the blue colorations, those also provide buy or sell conditions based on the capital structures of the economy. So what this indicator, the CIS-CCT Real Capital Cost Indicator and Corum's Capitalism Theorem focuses on is capital productivity and provides a signal based on an assessment of that capital productivity. And the same is true in the center bars, where the yield of the dollar is increasing, it's green. Where the yield is decreasing, it's blue. So let's take a look at what this means when we're trading. So when you're looking at the US dollar, Japanese yen, you can see right here at this first line, we have a green bar at the top, and we're still moving down in yields, and the cost of capital is negative, showing dollar underperformance. But this is a buy condition, and you can see that. And then you can see the sell condition right after this blue bar. When that sell condition comes up, you can see that markets start to move down. And then you get a buy condition at that peak low again, and markets start to move up in the US dollar, Japanese yen. So you can see how an underlying foreign exchange pair might trade relative to the performance that's established within the capital structures themselves. Now, if I was to turn on the ICE qualitative mean analysis, the QMA analysis for TradingView Toolkit, you can see as the markets move down, you can see the blue candles, and then you can compare those reversals to the cost of capital assessment from the CIS-CCT indicator for TradingView Toolkit, where those buy and sell conditions are relative to the capital performance within the capital structures of the market. So let's disable the QMA analysis and look at what the CIS-GG Pro Metrics algorithm for TradingView Toolkit looks like when compared to the buy-sell conditions marked by the blue and green vertical lines defined by the capital performance standards of Corum's Capitalism Theorem and the CIS-CCT Real Capital Cost Indicator for TradingView Toolkit. So for example, over the last week, we've seen a move up in the dollar versus the yen. We've had a couple of small opportunities where we've seen selling pressure indicated in the capital structures themselves. But at the same time, yields were moving higher, indicating better dollar performance. Today, for example, in today's trading day, we show some selling pressure against the US dollar, Japanese yen, based on the dollar performance within the capital structures, with a real capital cost of still negative 0.5. So this is Corum's Capitalism Theorem, CIS-CCT, Real Capital Cost Indicator for TradingView Toolkit. Make certain to go to the website at cisevents.wordpress.com. Sometime in the next week, there will be a slideshow up for the Corum's Capitalism Theorem seminar that goes over everything capitalism from a new economic perspective that's entirely market-based. And then I will also be producing and providing an updated formal video presentation to accompany the CIS tax plan which can be viewed from one of the cards in the upper right-hand corner of this video or at the end screen. Once again, I'm JC with CIS Trading with a special Markets in Focus presentation on Quorum's Capitalism Theorem and the CIS CCT Real Capital Cost Indicator for TradingView Toolkit.